now it's, getting to be late in the day in Australia, but when the European session kicked in, this Aussie has gained back everything that it lost at the end of last week. Huge. We talk about mean reversion. I more like to talk about, this monthly chart where it's like, okay, you have this Australian dollar market that tends to trade in this, 70, 80 handle range. It's in the long term, it's cheap, and when it's been historically cheap, it's tended to bounce back, and when it's been historically expensive, it's tended to sell off. It looks like VIX a lot, in the long term. But we're seeing some huge short-term mean reversion here. What did you see last night? What's going on this morning?
The Chinese announced that they're going to be more aggressive with their fiscal policy. I don't know if that helped them. It'll be interesting to see if FXI opens higher.
I would expect so.
Yeah, $2.50 higher. So it's up about 6-7%. Look how happy he is in his long FXI.
I'm not. It's so stupid because, I know all the guys are going to come in and they're going to be like, everybody likes to talk down the monetary policy. Oh, this stock or this equity market is up because of monetary policy. That's BS and this and that. I truly don't care.
Yeah, and
I got long China because it was beat up.
Right,
and that's really it.
And that's such an important point. Is this drive again? Where with this news about the Chinese trying to again desperately defend against possible tariff impact, and I think this is the first time in 11 years they've agreed to, be more aggressive with their fiscal policy. What that means, I have no idea.
And also,
it's a market
who could see that coming? Who could see that coming?
It's a market reacting on its lows, closed awfully weak, testing the will of the shorts. They weren't able to push through new lows, and they, again, anybody who had sold them on Friday is now in a difficult position. On a very short, that short-term scalper is in a tougher spot. So. This is where we will see that correlation between China and Aussie kind of play through a little bit. So when I saw this, I wasn't surprised, then kind of dove into what kind of had transpired and expected FXI to be up $1.50, not $2.50. But so what that means is Chinese stocks right now are a little bit higher, China a little bit stronger, and Aussie getting the benefit of that, albeit a big outside benefit because we were at such cheap levels.
Yeah, exactly. And let me pull up the daily chart because this is all short-term talk.
Right.
But this is a market that's still, if you wanted to be long this Aussie.
You haven't missed the boat.
You have not missed it. Because, where we went out on Friday here, Pete, that was really the low for the last year plus of trading. And now this is, a 50 pip bounce off of those lows. But just really quick as we dive into some of the rest of these markets. Yeah, Europe, not really affected by this. You're seeing this euro dollar market pretty much unchanged from where it went out at the end of last week. Now, did it get hit as hard at the end of last week as Aussie? No, but 105.60 is still, decently low for this market. Man, I forgot that we went down to 104.
Yeah, we had that capitulation down to 103.60. So, yeah, absolutely. So, and here's a case where great elasticity. We traded all the way down to 103. A 300 pip rally up to 106 was a pretty big rally. Yeah. If you were bearish and you thought the dollar had legs going into the end of the year, for me, if I'm going to make that trade, I feel a lot better selling that than selling new lows at 103, which I'm not that momentum guy.
Yeah.
So, but interesting to see. Tape action euro a little bit harder now because we were softer at one point, and now we're getting back up. We're not through 106. We're getting back up to the upper end of this congestion range again. So we'll see that. Cable, same story. Cable actually holding on the best out of everybody.
Yeah,
on the rally, we're still 50 pips away from the highs.
Nowhere near its lows. Yeah, if anything, kind of mid-range for the last year or so of trading. But yeah, these larger currency markets, I'll throw euro, sterling, and yen in here, although dollar is actually, as we speak, screaming higher against this yen, back above 150 and feeling fine as they do it because they're challenging
and
151 in a second.
Right, and this is so interesting. Now, news came out Friday, and nothing last night, but Thursday, Friday, the Bank of Japan cursorily saying, we don't want rapid FX moves, and the usual talk, completely ignored. So it's like, well, why did the talk in China mean something and the talk in Japan didn't mean anything? Partially the levels we're at.
Sure.
We didn't get that talk at 160. We got it at 150. So middle of the range.
Well, and I just feel like, although this is a big move here today, and we'll continue to watch this dollar yen because, 150 has been such. You and I never, ever are like, oh, this is an important price for this market or for that market. But, I mean, I'll be damned if we haven't traded 150. You look at this action in here, you look at this action in here, and really off of this level made some big moves lower or higher. Every single time we've gotten around here, it's been really interesting, and we'll see if the next stop is 155 or 145. I don't know which direction it'll be, but all I do know is we'll probably get there if last year's pace is anything in the next couple of weeks here. A 500 pip move has not been abnormal. But those major currencies, Pete, not the interesting piece recently and likely not the interesting piece this week. You've got Aussie, huge move here today. You've got dollar CAD, doesn't look big, but 25 pips has been a pretty big move in this market. U.S. dollar giving back some ground.
Little bit of ground, yeah.
Kiwi up here, 25, 26 pips. And as I rope in the calendar for this week, well, actually today, you have an Australian interest rate decision. Tonight, they're expected not to move interest rates, Pete, but they haven't cut out of any of the major central banks. They're the last one that has not cut at all. And they were pretty, competitive to the upside. 4.35% is not the 5% plus that the US and the UK got to, but it's pretty substantial. And I think they had a GDP come in last week that was the second in a row that was under what they expected and is sitting around like 0.2, 0.3% growth. This will be really interesting. Again, they're not expected to cut. They've been saying that they're likely going to cut aggressively next year. But, the Aussie U.S. dollar market down at 64 cents, I think some people out there think there could be a chance of a surprise cut or the fact that they might not cut and say we're going to be really aggressive at the next meeting.
And that'll be interesting to see. What's nice is this one at 9:30 is tradable. So you're not up at midnight having to wait for the number. So a little bit of short covering going into that, absolutely. A little bit of baking in what you're talking about. Couldn't agree more. So this one will be one to watch to see if we Aussie get some legs out of that as we go forward. We got CPI on Tuesday, I believe, or no, Wednesday. I'm sorry.
Yeah, this is Wednesday.
So U.S. inflation numbers Wednesday and Thursday. CPI on Wednesday,
and then we have. What is it? ECB. Did I miss Canada? Do I not have Canada in here for some reason? I don't. That's why I can't find it. We have Canada, I believe, here on Wednesday, right after that CPI. Wednesday morning, Canada will make a decision. And they're expected to cut 50 basis points. They got up to 5% even. They've already cut 125 basis points. Their unemployment last week printed, I think, 6.8%.
Right.
They're really worried in Canada, and this could be a really interesting one. And the gasoline
of the tariff thing doesn't help either.
Yeah, so, exactly.
Absolutely. So they're being much more aggressive on the rate hike, the rate cut, excuse me. And you're seeing that play through in that currency above 140 kind of struggling to get any feet under it whatsoever.
Yeah, if we pull in the daily chart here, this has been one of the weakest markets, this Canadian dollar in here, and getting a little bit of bounce here today, but not as much as that Aussie, and right there near its lows for Canada, high for U.S. dollar at one. Man, I forgot that on Friday they put all of this back in because they went up and hit 141. I believe it was maybe 2 weeks ago, maybe pre-Thanksgiving.
Yeah, it turned a little bit.
Turned over to below 140, and it was like, okay, that might be the move. We're 141 bid again. Jeez.
So there, like we said, I think it'll be interesting to see Aussie Canada, an interesting pairs trade. That probably is pretty much.
Yeah, let's take a look. Yeah, Aussie getting a nice move here today. But this has been a better one if you're talking about actual mean reversion over the course of the last year. Has really bounced around between 93 and 88 cents. Right now, smack dab in the middle of it. But yeah, might be a better one for the day trade, whereas coming out of these interest rate decisions from Australia tonight and Canada on Wednesday morning, you would expect some more big moves and sustained action, because I wanted to get back to
out of Aussie.
Yeah,
absolutely. So Aussie Kiwi, we know the correlation. Aussie Canada, we know the correlation. Not as positive as Aussie Kiwi, but both those will soften the blow a little bit if you want to have an Aussie position. So it's just thinking a little bit, and you should look at, well, it doesn't have a dollar component in it, so it's more difficult. Doesn't make it more difficult. As long as the markets are liquid and tradable, substituting in something that doesn't have as much beta to it by having two correlated, removing the dollar component of it gives you something that has two higher correlated pairs against the dollar, so they themselves will have less beta or movement to them. It's a way to get Aussie exposure and possibly mitigate a little bit of the beta or the volatility that may come in from a pure Aussie move. Because Canada will be pulled along with it, and Kiwi especially will be pulled along with it. So moving along that line, don't think of this as, well, I could trade everything with a dollar on either side of it, because I understand that, but I can't trade something without a dollar on it. It is really about opportunity, relationship, and the ability of, and how big a bite you want.
Well, and it'll be especially interesting here because, well, a couple of things. So we have Australian Central Bank tonight.
Right.
We have Canadian on Wednesday morning. We also have US CPI on Wednesday morning. We have ECB, I believe, on Thursday early morning for us here, because it's all leading into the Fed next week. And so many interesting things going on. But then you talk about year end, Pete, and you were talking about how, the week following next week being FOMC, the week following that is Christmas week, and then after that, it's New Year's week.
Right.
And so both holiday trading schedules, the last couple of years, and maybe you can speak to this, maybe I just have a little like recency bias, maybe this never happens, maybe this always happens, but the last couple of years, we've seen a trending market going into the end of the year.
Absolutely.
And one year it's dollar bid, the other year it's dollar offer.
Yes.
And right now, it's looking like dollar bid going into that end of the year. But a week like this week is the one that kind of sets the tone for what could happen.
Excellent point.
Those lower
you
schedules.
Start to sniff out a little bit of what's going to come through on those flows through the end of the year. Then you go into New Year and kind of becomes a game of chicken.
Well, they've reversed it every time. The last couple of years, they don't always do it.
Not every 75% of the time they reverse it. It's the one time where it opens at the higher or lower end of where we have kind of pushed the market. It sits, and if we don't get the capitulation, then it's everybody, okay, we're off to the races. And so, but knowing that context, it gives you a lot of opportunity. Again, setting reasonable metrics around these scalps of nothing's too cheap, nothing's too expensive. I'm going to set, my win and loss metrics around these, scale them. I'm going to downsize either by correlated pairs or by just the size of the trades.
Sure.
And just great tools to take advantage of this.
Just as a last example, this was last year. U.S. dollar was getting hammered going into the end of the year. And then January, U.S. dollar took back a lot of that ground. This year, obviously very different. Dollar has been on a tear really since before the election, but especially since the U.S. election. Right. We'll see if it continues. You and I love this, whether it's like natural gas and seasonality.
Right.
It feels like whenever you think you know something about one of these markets, it gets ahead of you. So maybe this was the move, the end of the year move we've seen the last couple of years.
Early.
And this is the reversal that we've seen. Yeah, it's come early. With natural gas, it's always like, We're waiting for November. We're waiting for December.
Yeah, and those last couple of years, that moved up to October, then September, then August.
Exactly.
Don't get too trapped in the time zones.
This week will be interesting. That's
yes, because
basically
we've got, you just covered some really interesting events. It'll set the table for, does the market have enough dollar strength to continue into the end of the year, or are we going to see those longs get tested and maybe a little bit of a reversion? But that's it for today. Exciting week coming up. Have a great day. We'll see you back here tomorrow.